Last week's pending home sales dipped to 68,000 single-family contracts. It's an expected Easter holiday lull that marks the first sub-2024 weekly tally in 6 weeks. Buyers remain mortgage rate sensitive, of course. April's tariff-fueled spike in Treasury yields pushed borrowing costs higher, but that's subsiding just a bit, and the typical monthly mortgage payment is roughly 4% cheaper compared to last year. So, given a little calmer market, we anticipate pending sales will resume growth in next week's Altos report. On the supply side, inventory climbed again and is poised to eclipse 2020 highs. So, new listings also dipped with the holiday, but remain on track to outpace last year. Home sales are essentially flatlined. In short, April's holiday purchase pause looks temporary. May should resume the very modest growth trend as the broader market continues its slow march towards normalcy amid growing supply and stable prices. I'm Mike Simonsen. I'm the founder of Altos Research. We track every home for sale in the country every week, all the pending home sales, all the changes in that data, so you can see the market shifts before the headlines. If you need to understand or communicate about the housing market, you should join us at altosresearch.com. Okay, let's get to the data. With just 68,000 single family homes that went into contract this week, which included the Easter holiday. So that dip was expected, of course. So, due to the late Easter holiday this year, and last year Easter was early, this is the first week in 6 weeks where the weekly pending home sales came in below 2024. So, home sales have been finally trending with a little growth. The big question is what's next? Potential homebuyers are very sensitive to mortgage rate changes. Since the tariff announcements at the beginning of April, the bond market has been on a wild ride. There was an initial big spike in both the Treasury, the 10-year Treasury yield, and the spread between the 10-year and the 30-year mortgage rate, which pushes borrowing costs up. But in the last week or so, mortgage rates have ticked down, maybe as the administration backs away from the most destructive parts of the tariff policy. And in fact, mortgage rates are below last year at this time. A typical mortgage payment is 4% cheaper now than it was if you bought last year at the end of April. 4% cheaper. In the next week, we should see the weekly pending home sales pick up pretty significantly. I'm looking for 78,000 single family homes sales started next week, which would put us back above last year's pace. Last year, because of spiking mortgage rates at the time, the weekly home sales actually peaked in the first week of May. So normally home sales don't reach their seasonal peak until June or July. And you can see last year's peak here in the blue line just above the next week at the beginning of May. As of now, my expectation is that May home sales will resume ahead of 2024. So then there's the Memorial Day dip in 5 weeks, and then the next dip in holiday sales is the 4th of July. So the takeaway for the weekly pending home sales is that the holiday dip from Easter is temporary, and we currently expect home sales in May to resume being higher than last year. Last year's sales were very low, and so if we come in fewer than that, it'd be a very bearish market indicator. So, meanwhile, on the supply side, the available inventory of unsold single family homes grew by 1% for the week to 729,000. That's 31% more homes on the market now than last year at this time. Again, because last year home sales were grinding to a halt, inventory was climbing pretty quickly. So far in 2025, inventory has been growing at a faster pace than last year. So we're going to see if that changes now in May. So we saw a little compression this week to 31%, but that also includes the holiday. So in this chart, each line is a year. Next week, the purple line, 2025, will cross over 2020. So we will have more homes unsold on the market than at any time in the last 7 years. The green line here is 2018, which you can see there above us. The mortgage rates were climbing in 2018, so inventory rose during that year as well. The inventory growth curve is pretty clear. If we stay on the same trajectory without like a dramatic shift in demand improving this year, then we should expect to finish 2025 with more homes on the market than at any time since before the pandemic. So, on to the new listings. There were 70,000 new listings for single family homes this week. That's 10% fewer than a week ago with the Easter holiday. But interestingly, it is basically the same number as the same week a year ago, which was not a holiday week. So last year, that the Easter holiday was at the end of March. There are more sellers each week now. Our holiday week is like where we were normally last year. So I fully expect that trend to continue. There are still new listings which take offers and go into contract immediately. We call those the immediate sales. But there were only 13,000 of those this week. So the rate of immediate sales is declining. And that's actually a good indicator of organic levels of demand. So if there are home buyers out there shopping, they jump on the best properties as soon as they can. Likewise, when demand weakens, then immediate sales numbers drop quickly. Buyers wait. And notably, last year at this time, the percent of sales immediate dropped rapidly in this period when mortgage rates spiked a year ago. That rate is also dropping again right now a little bit, and in maybe in response to the April mortgage rate spike we saw recently. So this implies in next week's report, we'll see new listings jump back close to 80,000. We have more sellers each week now than we've had at any time in the post pandemic era. So it's still slightly fewer sellers each week than the old days, like 2017, 18, 19. But basically, the market is on average nationally back to normal. In this chart, the purple line is at 2025 and it dipped a bit this week. Don't read too much into the holiday. It will jump back to the old levels again next week. Like I said, I'm looking for 80,000 new listings unsold next week. If it comes in higher than that, like 84,000, that would be a notable move. The trend isn't the same nationally, of course. The low for home supply is Connecticut. Connecticut is my proxy for all the northern markets where inventory remains very tight. It is the only state where the active inventory of unsold homes is still less than a year ago. But there are about 3% more new listings each week in Connecticut than last year. So there is some little growth in supply. So in Florida, on the other hand, there are 12% more listings, more new listings each week unsold than a year ago. And condos in Florida are even slower. Let's take a look at a slightly different view of home prices this week than we have recently. So, this is a long term view of the median price of all the active inventory, which is just now over $453,000. So, I like this view of the active market because it tells you if if we walk into the market today, this is what you can buy. The median sales price, on the other hand, is just under $400,000, but the homes available to buy are actually more expensive than that. So this chart tells us a very important story about the housing market. The first thing you notice is that after that steep climb of prices during the pandemic, home prices have been basically unchanged for 3 years. And there is no sign of home prices moving higher than that this year either. So, what that means is think about what it means for affordability. Home prices rose 35% in just 3 years. But then in the next 3 years, home prices basically haven't moved at all. So, what was 13% per year of home price appreciation is now less than 6% per year over those last 6 years. And meanwhile, incomes have grown. So homes have actually improved in affordability recently a little bit. I have a series on housing affordability coming out in HousingWire starting this week, a series of articles. So look for that if you're interested in the dynamics of this market and what happens next for housing affordability in America. For now, the takeaway on home prices is that they remain just a fraction ahead of last year. Whether you're looking at the ask price here, like we are here, like at $453,000, it's not quite 1% more expensive than a year ago, basically unchanged. Or if you look at the weekly pending home sales, where the median price is $399,999 this week, that's just fractionally above last year at this time. And there is no signal anywhere in the data that says home prices are going to break higher from here. So I expect a fourth year in this horizontal pattern that we see here. And then finally, price reduction. So the percent of homes on the market with price cuts ticked up a little bit this week, up 40 basis points to 35.6%. A 40 basis point move in April is not catastrophic, but it sure doesn't show demand accelerating. So as a reminder, this stat tells us, that the homes that are on the market now and don't get offers that they were expecting, one option is to cut their price. Last year at this moment, price cuts really started picking up. As I pointed out above, the home sales hit the brakes hard in May 2024 with that spike in mortgage rates at the time. So, you can see that demand shift here in the blue line from 2024. See how it did this inflection point, like right now at the end of April, beginning of May. So at that time, mortgage rates jumped to 7.5%. Buyers stopped. The weekly pending home sales rate peaked in April, at the end of April, fell in May, which is very unusual. And since those sales were stalled, home sellers cut their price in an attempt to stimulate demand. So the takeaway from the price reductions as we roll into May is that our comps with 2024 get a lot easier in May. And at the current pace, we should see the headline sales numbers not show great gains, but the headlines will say things like April, home sales are growing, May, home sales are growing over 2024. So for the next couple of months, expect those headlines to sound actually a little bullish to prospective buyers and sellers. The headlines are going to say growth. So that is, of course, unless something crazy hits our markets and the current trends change quickly. Like that's a real risk, but it's one we don't have any capacity to predict. There's just so many wild variables out there. We just have to keep our fingers crossed for a little normalcy. Okay, that's all the data we have time for today. We'll see you next week. There's a link in the description below. If you need to communicate about this market with buyers and sellers, you should join us at Altos Research. You can run a free report and get the local data to get started today. So we'll see you there.